Hi, welcome to the Market Alert for Friday, the 30th of May 2025. So yesterday, bonds and bullion bid as tech, tariff and troubling data sparks pump and dump in stocks and the US dollar. And the second headline, US stocks edged marginally higher and futures wiped out the majority of initial spoils after weak data, and US appealed the tariff ban. Well, no surprise there, is there really? So a bit of profit taking to start off yesterday. And of course, markets always managing to try and pull back from that. Economic data today, it's CPI for Germany. They never give a specific time, it just gets released into the markets. Spanish CPI as well. Core PCE price index month on month and revised consumer sentiment to be released from the US at 3 p.m. there. Right, let's have a look at this pump and dump and kick off with the Dow. So in the Dow, we can see the market obviously move lower and then started to come back off. We have got the 200 MA in the way there for the Dow. Market trying to get through this yesterday, but of course it's failed to do so, and overnight prices are still above the 20 bar moving average. So still moving in the right direction, just this tariff nonsense still getting in the way. Yesterday you can see the futures were fine for the first couple of hours, and then as the US woke up, then they decided to dump the markets, and then they pumped them back up, as you can see, towards the close of trade, trying to get back above that 200 MA, which is where it is at the moment. The market needs to get back above the DP and also the close of yesterday and the 50 EMA in order to move higher. But when you look at the daily charts, no great shakes, no pun intended, but the market having a bit of a shakeout there yesterday, getting rid of some of the weak longs. Meanwhile, in the German DAX, again, you've got that one red bar. We had it last week, actually a week ago today, when Trump announced a 50% tariff for all European goods. That, of course, was soon discounted and postponed. And the same here, the fact that they're going to appeal, and they're likely to win the appeal as well, is just one of those sort of let's see if we can just shake the market up, see if we can stop Trump. And I'm afraid I very much doubt any appeal will be successful. What's more important is when the tariffs come into play on the 9th of July. That's where my focus is. 30 minutes, again, you can see shakeout there. Get rid of the weak longs. But now you can already see overnight the market wanting to move higher as well. Took out the low yesterday, but like I say, we're already starting to make our way back. The daily chart for me is always the interesting one, and again, it's just one red bar in the long-term up move. So again, bit of a shakeout. Take the stops out, move the markets back to the upside. S&P 500 strong, not closing below the 5 bar yesterday, starting to move up in the overnight. Barely noticed the court ruling yesterday and moved up, apart from in the 30-minute chart, like I say, where you've got that shakeout down to the 200 MA, down to Wednesday's low, and the market retesting this overnight and now starting to move back to the upside. UK, again, you can see the tariff for the Europeans, and then you can see the court ruling, easy to spot in the charts. And then the 30-minute chart, again, you can see just where there's one shakeout. This was retested later on, and now the market's making its way back to the upside. It's Friday. They like to move the markets to the upside if they can, to finish the weekend on a high note. So in yesterday's alert, I spoke about the gap that was in the US dollar. This was filled, and now you can see the market becoming sideways once more for the US dollar there. So prices heading back into a consolidation phase. They're no doubt going to maintain that until either something big comes out of nowhere, or it's waiting for that 9th of July when the tariffs come back to the forefront of market trading. So in the metals, well, this is the silver chart. It's Smackdown Friday, so don't be surprised to see the market retesting that 50 EMA during today. If we look at the 30-minute chart, we've already started making an attack for this. I expect a bit of a bounce and then down to the low at lunchtime, a bit like yesterday where they smacked the market down at lunchtime as well. So watch the LBMA pricing at 1:30 to 2:30, and it's Friday. There is a pattern. The silver market likes to be smacked down during a Friday session. Meanwhile, gold held itself very well yesterday, but a bit of weakness overnight there. 30-minute charts, again, just sitting at the DP, a bit of weakness there as well. So they might try and bring the dollar back as well to add further weakness to the gold price there. Let's have a look at the gold-silver ratio. Well, very quiet, isn't it? This too is consolidating at the moment. It's not a bad thing for the metals to do this if they're going to move higher. Having come up over $3,000, from $3,000 all the way up to where we currently are, and then hitting a higher $3,500, the market needs to consolidate, and that's precisely what it's doing at the moment. Still far too high on the gold-silver ratio, but listen, if it's going to keep the market in the highs then and consolidate, that's fine by me. It's had plenty of opportunity to smash the price, which it has, but only on a daily basis, and then reversed either overnight or the following day. So sideways consolidation at the moment. So have a look at yesterday's market action in the DAX 2-minute chart. So yesterday, after I finished recording, the market moved lower. It was a holiday for the French and the Germans, so the spread on the German DAX for the company that I use, which is Trade Nation, they kept the spread at 8 all day, so no trading on that platform yesterday. There you can see you've got that 8 down there. I'll just let me just change the colour so you can see, but it's just down there. It says 8 spread. IG were still at 1.4, so that was useful, and other companies as well, Pepperstone at 1.2 I think eventually. So anyway, the market opened, and the cash market opened, as I say, 8 a.m. and the market moved lower. The volume was fascinating to see here, because obviously you see them starting to buy back in here because the volume's greater, the range is less than the previous bar, so it was trying to bring some support into the market. We then hit, again you can see how it was increasing as the market went down and the bar's becoming narrower, or the volatility dropping off, and then prices trying to move back above the DP and the close. So prices then hold. We have that initial shakeout, get rid of the weak longs, and then we get the dead cat bounce. We had a potential buy signal that wasn't filled, and then prices moved slightly higher up to the 50 bar moving average, and then it failed there. We see the selling return to the market, and then we move lower once more to the close, and then we get a potential sell signal. This then makes its way through, as you'll see in a moment, and then moves down, and again watch the volume at this level. So the prices continue to move. I'm just recalibrating the charts, and then you see this spike in volume, and again you've got a narrower range and a huge amount of volume, and you'll see this trade that we're sitting there with 87 points. This is stopped out, moved out, voluntarily taken out because of this volume coming into the markets there. So prices then moved sideways. We had a potential buy signal there that we carried on moving through the morning, as you can see there, to the close, and then once again prices reversing. So we can fast forward all the way through now. Again you can see prices coming down to the low. Let me change this colour. I don't know why, obviously a more operator error issue there. So you see the market coming back down to the low there, and then through it. So they tried to hold it at this level, because you can see the volume there compared to there as well. You can see them holding the market at the low. They like to try and do this, but unfortunately this failed, and prices headed down to the S2, as you'll see there. So went straight through. When the US opened, the selling came in heavily. Again, they tried to hold the market there with the buying coming in, but this also failed. And then we see this bar. When you see this type of bar, you know the down move is going to be over, even if it's a temporary one. And then exactly what happened there, that sort of price action, and then the market sideways. So there was lots of potential opportunities here, but what was happening, which really set the tone for the signals that came later, you'll see that the stop is taken out before the entry price, and then you'll see the same thing there. The market takes out the stop again. So the upside was already showing some difficulty as the entry prices weren't being filled, but the potential stop loss was taken out before it was filled. So then we move lower again. We get some green coming in as the market tries to come back, at that BRN and psychological level. But now you'll notice as well that we've got a change in all of the averages. They're in a different order to when the market's going up, obviously. So again, but very important, we then see a potential buy signal. This time it's filled. And then this is followed by a potential sell signal. And this is where it starts to get messy and nasty. The market then takes out the stop on the buy side, which is a small loss. And then we get the market moving down. And again, even though it's not quite there, it's 90% of the volume of the previous bar where they were selling, and the market reversing back to the upside. And there's another couple of losses to come, spoiler alert, as the market starts to get into a sideways move. So the buy signal is filled, then that's taken out, and there's just weakness there. And then they decided, well, let's just whip the market back up, so they do. And that was a relief to be over in the afternoon, because it was just stuck in a sideways move as the market tried to find some sort of direction following the overnight move to the upside and trying to bring it back, of course. So overnight, let's just have a look, see where we are. And there we go. It says it all, doesn't it? They're already trying to bring the market back. Long way to go to yesterday's high, I might add, a very long way. You don't think you're going to see that today on the upside, but you should see a move to the upside. So the first upside target outside of the psychological levels is the DP level, and then above that you're getting into the realms of the R1 on the upside. You may even get a bit of a retest on the low as well, as it's not too far away before they move the market up. Saying that, it's 100 points, but they had no problem moving the market down 100 points plus yesterday to then bring it back. But the order of the averages at the moment are on the buy side, and the DP is also within the crosshairs there as well. So there we go, a bit longer this morning, but a lot happening during yesterday. So expect a bit of a more positive day on prices today. It's Friday, as I mentioned before, and that means also that you can expect a smackdown in the silver market as well, and the metals. Right, that's it for today, this week. So have a great weekend, and as ever, thanks for watching. See you in the next one.